The U.S. Federal Reserve may have a holiday gift that we can't return: higher interest rates. Fed Chair Janet Yellen says the central bank may consider a modest interest rate hike as early as December as the economic news continues to show improvement. Michelle Clayman from Amsterdam Partners is back on Exchange to run down the numbers. Michelle, good afternoon to you. I seem to remember just a month ago, the analysts were saying there is no way the Fed could raise interest rates because we had this slew of soft economic data coming out. And now Janet Yellen says maybe not so fast.
Well, she says not so fast, but she still may be boxed in by events. Last month everything was gloom and doom. The markets had a horrible time of it from August onwards, although October towards the end got a bit better. And global economic indicators were weak. Now we're seeing a bit of an improvement in them. So, for instance, the producer manufacturing indexes, the PMIs, are all going up globally. So that's a good sign. If we look at the City Economic Surprise Index, it's still
What is the Economic Surprise Index?
So what that looks at is how economic data comes in relative to expectations. So if it's above, that's good news. If it's below, it's bad news. And they net out all the numbers and they give you a nice graph. So in good times, that index is in positive territory and it's going up. At the moment, the good news is it's going up. The bad news is it's still in slightly negative territory. So that means we're not out of the woods yet.
But what we've heard with interest rates is one of the key indicators that the Fed is looking at is wage inflation, better salaries for people. Are we starting to see that?
Not markedly. I mean, the good news is that consumer spending has held up pretty well, which means that consumers are feeling fairly good about their prospects. The bad news is that things like the labor participation rate is low, so that's how many people are actually in the labor force. And, you know, you can...
Which has been a problem for the entire so-called economic recovery of a number of years now.
Yes, a number of people have become discouraged, so they're not even looking for work. So, yes, everyone likes a pay raise, but I don't think we can get overexcited about it yet.
There continues to be concern, though, that the Fed is boxed in and can't really raise interest rates, that the market will take it very negatively if they do. And with China slowing down in particular and China cutting interest rates, that the Fed may, as you mentioned, be boxed in.
Well, a hike in the Fed interest rate will be seen as a positive sign
because the economy
is doing better.
Yes.
But you rightly point out the Fed is boxed in because China has been easing, Europe has been easing, and there's a limit to how much the U.S. can do on its own.
Part of the issue with wage inflation, et cetera, and the economy is the oil sector, which continues to be very weak. I was in New Mexico just a couple of days ago, a state that was heavily invested in fracking and saw this huge boom that has turned not quite yet into a bust, but certainly the air is coming out of there. So how much does the oil sector negatively impact our current economy?
Well, obviously the energy sector itself is affected, and then a lot of industrial companies that sell into the energy sector, they're affected. And then there are fallouts. I mean, you talk about New Mexico, but think about North Dakota. I mean, that was
a big
oil rush land.
Yes.
And so there was construction going on, lodging was at a premium, restaurants were doing well. So certain areas of the country are going to be suffering.
And the flip side of that is you mentioned consumer confidence. When people have more money because their gas bills are lower and their heating bills are lower coming to winter, they may spend more.
Yes, so net for the U.S. economy, lower gas prices are good because consumer spending is still about 2/3 of GDP. But of course, if you're in one of those states that's now seeing the downside of the oil bust, it's not as happy a story.
So do you think we see an interest rate hike before the end of the year?
I would put it at 50-50 at best.
And is it, we only have a few seconds left, but is it really all that important? Because it's going to be a tiny little hike, right?
Well, the whole world will be watching, but net, if it's a tiny hike, it isn't that important.
Michelle Clayman, thank you as always.
My pleasure.
See you back here soon. Coming up on Exchange, Californians make their bed on Airbnb and warnings of a government shutdown if Democrats load up on spending programs. Stay with us. You're watching Rise Exchange.